Chadha joins us, and he joins us with a big smile on his face because I think he is been buying Reliance.
Hi, Nikunj. Good morning. Yes, we are adding RAL on
See, I
dips.
guessed it with a smile on your face.
No, it's good to smile when there is more volatility, Nikunj. That's a time you get better bargains. So volatility is always welcome.
Why do you think the current volatility in the market is not risk? Because ultimately markets will move because of earnings. GDP was supposed to grow at least 7.5%. Now it is likely to grow at sub 7%. Earnings were at least expected to grow at 10% plus. Now Motilal Oswal consensus is 6 to 8%. So if the economy is slowing down, what looks like volatility right now could turn into risk.
So, Nikunj, you got to differentiate whether it is more structural or whether it's a more short-term phenomenon or a bit of a cyclical. We are in the latter camp. We don't think that India's potential is reflected with 6.4% GDP growth and nominal GDP being, high single digit. I think a lot of it will change. The government has not spent at all. They are short by at least 25-30% on capex. 11 lakh crore was the number. So you will see a lot of backloading now in this quarter. A lot of large orders in infra, in defense, in power will get announced. Then we have a budget where I think the government realizes that there is a slowdown in consumption. So you will see some steps being taken. I'm expecting both fiscal and monetary steps with RBI policy also due in February. And a large part of this trade in terms of FI sell-off is also happened. It's happened similarly in 2016. We tend to ignore what's happened. So the dollar has been on the rampage. The dollar index is around 109 levels. The bond yields have been going up. So this also will settle once Trump takes charge. A lot of reality sets in that what can be done, what cannot be done. So my view is that the second quarter onwards, Q2 onwards, maybe budget could be the trigger. Things may start looking better. Markets have this ability to discount things quickly. They've discounted slowdown. I'm sure when the recovery comes, that will also start getting into the prices soon.
Gurmeet, tell me how much of more steam does the entire capital market theme has? I mean, structural as it may be, do you think a large part of the gains, at least for the fiscal, are behind us?
You're talking about the capital marketplace, the exchange.
Yes.
Yeah. See,
Yes.
in the near term, maybe valuations are slightly rich. If you see BSE, for example, trades at what, 70, 80 times. If you look at NSE now in the unlisted market, that is still at around 25, 30 times. But we have to understand that you have to differentiate between the regular plays and the plays where we are more duopolies. So an exchange play, for example, is largely a duopoly with NSE at 90% market share almost. On depositories, again, it is CDSL, which is almost now 70% market share. NSDL has 30%. RTAs, you again have CAMS and Carby dominating. So wherever you have duopolies, the growth is more structured. And so we are more bullish on depositories as more and more things get dematerialized. AIFs have to be now dematerialized. There is an insurance thing happening. Similarly for RTAs. You have a lot of work coming with newer products. Alternate market is growing extremely fast. In fact, that may outpace the MF industry growth over the next 3-4 years. So some of it, in my view, is structural. So you may see a time-bound kind of a consolidation in between. But I think if you have a 4-5 year view, I don't think so you should be worried too much.
Starting point, let's say for some of these stocks is today, which is Jan 2025, next 3 years, should we expect double-digit CAGR returns?
So Nikunj, I think it will not be a beta market. I think 25 will be tougher. So you can't have. I mean, we've had. So if you look at, for example, we have had almost 8 out of 10 years of Sensex giving positive returns, right? So over a 3-4 year, maybe we will have. I mean, we've had 2-3 very good years. 22, 23, and even 24. If you take the numbers, I think on a BSE 500 basis, we would still be 15-18% for the year. So my sense is this year is going to be tougher because, as you rightly said, the valuations are not very reasonable. But there are pockets where either the earnings will pick up or earnings will remain strong. So, for example, in defense, in my view, you will see large orders coming in. There's a lot of indigenization happening. There's a lot of defense technology themes. The defense minister announced that this will be a reform year, and there's a huge shortage, whether we are talking of aircrafts or drones or anti-drone systems. So that's why I say it's a defense technology play. Similarly, in financials, they haven't done anything. We've had 2 hard years. RBI has been micromanaging in terms of putting restrictions on various loan categories, etc. I think a lot of the interest rate issues will start easing once India starts easing rates. A lot of the stress, whether it's in NBFC or microfinance, is in the price. Bank Nifty is at 15 times, historically around 2 times book, which is lower than the 10-year average we have seen. Then there are some niche themes, like recycling as a theme. The entire space worldwide is $600-700 billion. In India, it's hardly $2 or $3 billion. The biggest large company in recycling, let's say in water management, is, let's say, Vietech Wabag, which is 10,000 crore market cap. So you have mostly small caps in this space. Similarly, you have some opportunities which are in the new age companies. What we are consuming right now is not getting really reflected in the Nifty. The kind of expenditure we are doing on digitally, whether it is a Wi-Fi, OTT, health subscription, music subscription, online purchases, is not getting captured in what the index is. A lot of those names will start coming back. So I think you got to probably start taking guard again after you've made good runs and see what's going to work now. And I agree with you that it's going to be tougher, but I think there is still a double-digit CAGR to be made.
Gurmeet, we are just a day ahead before the earnings season that is going to kickstart, and Bellwether TCS will be coming out with the earnings. So specifically from the earnings perspective, which are the sectors that you are betting on and which looks attractive to you at this point?
I think IT should do well. So there are three things. One is the currency thing, which has probably near-term impact. Second, if you see, the wage hikes have either been delayed or wage hikes have been very low. The big issue was IT companies was attrition. A lot of companies were facing 30-40% attrition with frequent wage hikes. So both of these issues have been solved with issues happening. Third, the US, if Trump walks the talk and really cuts taxes, corporate taxes, you'll probably have more discretionary budgets spent on tech. The only thing is the IT portfolio should not just be IT services. You got to have a combination of companies which is including services, including IP-led names, including companies with the software component being high. So you got to be a little careful there. And even in this space, the good ones are not cheap. So something like a Persistent is 50 times plus earnings. KPIT has seen some bit of a slowdown because it's largely dependent on auto. It's a unidimensional tech company, if I were to put that. So you got to be careful in balancing it out. So we like HCL and Infi in large cap names. We like Persistent. We like Newgen. And we are also looking at, I also consider a lot of these new age companies like Zomato in the digital portfolio. So we are looking at this space. The other space I think which should do well in earnings is healthcare. I think that not only from a this quarter perspective, but structurally so both branded as well as CDMO, we expect good earnings to come through.
Okay, Gurmeet, great to have you on the show. Thank you so much for your time and speaking with us today.
If you like this video, then like, share and subscribe to ET Now.